Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Earnings coming back. We were a little bit quiet there for what seemed like a few days, but we've got some earnings to discuss this morning. Pandora, Roku, HP. Of course, we will talk about the reaction to yesterday's Fed minutes. We got a little bit of a roller coaster in the market this morning. Talk about an upgrade in HMNY as well. Our guest today, Tommy Lackey, has not joined the show for a while, but he'll be with us at 8:35. He is the managing partner and portfolio manager at Relativity Capital Advisors. Joel, how are we doing this morning in the market?
S&Ps are in the green by 575. What a range overnight. We opened flat, went down to 2682, and we are now 25 handles off that low. 0950, that's your pre-market high. Tuesday's close. That's going to be my area of interest here. That was 14 even. That's also your daily pivot. You have crude in the red by 23 cents at 61.45, still holding in the 60 handle. Gold falters again here, 13.25, down $6. Silver in the red too, trading at 16.48, down 14 cents. And Bitcoin sniffed 12,000, boom, right back under 10,000. We're going to bring Dennis in. Dennis, are you doing okay? I want to know if you're upset or not.
Upset with?
The women's hockey.
The women's hockey losing.
Yeah.
I knew it. Yeah. I knew you might get me on that. It is a little bit upsetting, but I'll tell you, that American hockey team is good too. So they lost to the best, I guess, the best this year. So we'll give you that one. We knew the Americans were going to be the only challenge for the Canadian women's hockey team. It was a good game. Americans pull it out. So congratulations to all our American listeners on the Canadian or the Americans women's hockey team.
Dennis, were you up till 2 a.m.? Is that why you're so tired?
No, I didn't watch it, actually.
Okay.
I'll watch the men's. But you know what? It's hard to even get pumped up for the men's because there's no NHL players in it. So I don't know. I was disappointed, obviously, that Batman didn't let the NHL players go for the men's. But I probably should have watched the women's. But for some reason, I've never really been into watching the women's hockey. But it's good hockey, though.
And I just want you to know, on one of our TVs, we have curling on here. So if you need...
Oh, I see that in the background.
Yeah, can you see that? Oh, yeah, you can see it over in the left corner over there. Yeah,
Oh, yeah. See everything in the background. You got to watch what you guys do in the background news desk. I can see all you guys back there. So make sure. Watch what you're doing. Okay. We're watching you.
All right, so Fed minutes. Holy Toledo, what a range there. Wow. Spencer, you want a quick recap of that? And
quick recap is that officials are looking for more economic growth, and they're looking to continue to raise rates gradually. That's pretty much where that's where we were, and that's kind of where we still are.
I'll just say, man, we were up. We were looking good. We actually rallied a little bit on it initially, but that was a head fake because holy cow, when we came back down hard, and we basically lost 50 S&P points from the highs.
50 or 70 if you could.
After our session, yeah.
If you could include that. Just, I give it, big numbers, daily numbers and stuff, but one I've actually been keeping the track of the closes on, and that's 2703.75. We'll round it off. We'll call it 2700. That's a 50% retracement, Dennis, of that move from 2870. What was our high? 2878.75 to our low at 2529. So 2700. That's the battleground. Yesterday, you were talking about just a rip back up to new all-time highs. I wish I kind of would have faded you then, but we could go.
I don't think I talked about a rip back up to all-time highs. Joel says when I say we can get back to all-time highs, he thinks we're getting there in one day. Just because I'm a day trader doesn't mean all of my calls equal one day, Joel.
Well, do you want to go?
I think we test the highs before we test the lows.
Okay.
So I think we make new highs before we make new lows of that most recent move. So I'm looking at the 252 on the SPY, which I don't know what that is going because I don't pay for my S&P quotes, but 252.92 on the SPY, and if I'm looking at the highs, that's 286. So 16 points. We're almost right there in the middle. I will make that bet with you right now. I think we do the highs before we do the lows.
So you think we could just go 2,900 versus 2,600, and I'll be giving up the edge a little bit because we're trading at 27.05. So you would need to get 20 points past the new all-time high.
No, wait, your math is not right on that. 27.05. You're giving me 200 up and 300 down.
No.
You're cheating.
I'm at 2,800. I'm sorry.
He's already cheating. Like he tries to catch me in the morning. He pretends, oh, I made a mistake. But meanwhile, he'll say, check the tape. You lost the bet.
Okay, 2,800 versus 2,600.
I can't talk S&P futures because I don't get the quotes. They charge me $600 a month because I have a license.
Right.
So that's why I don't pay for S&P futures quotes. So I only pay for SPY.
All right, I'm going to wait one more day.
SPY?
It would be 280 versus 260 is what it would be.
280 versus 260. That's too tight. I gotta go farther. I'd say it'd be 290 versus 250.
Oh, so that would be a new all-time high.
That's a new low or a new high.
Oh,
it's a pure equal bet.
A long-term bet? Long-term steak dinner?
I do the steak dinner on this one. Get that last steak dinner back.
Sold.
Yeah. So okay, so we got 250. Joel wins. 290. Denny wins. Yeah. Sold. We got a steak dinner bet at 8:07 in the morning Thursday. Look at this.
Okay.
All right, done. That's where we're at. All right, so we got a bet. I'm still sticking on my bull train. Joel's on the full bear train here. So I don't know. It's kind of a coin flip here. It's going to be an interesting one. I could make the argument both ways.
Okay.
But I'm going with that. There's underneath demand here, and the money managers still want to be in stocks.
Okay, and I think the world's coming to an end. So, all right. So let's get to some earnings stocks.
Spencer, that is your cue.
All right, let's start with Roku, I guess. Let's do Roku since this was an interesting one yesterday. Q4 EPS, 6 cents. That may not compare to a 10-cent loss estimate. Sales of 188.2 versus 182.5 million dollars. So sales coming in a little bit higher. They did report a net loss for or they see a net loss for this current quarter at 15 to 21 million dollars. Still losing money. Their fiscal year guidance, they see a loss of 40 to 55 million dollars. They see sales in the 680 million dollar range versus 660 million dollar estimate. So, losing money, but numbers coming in a little bit better than I think what people thought.
We talked about this level, and I said yesterday on the show, if for whatever reason I think I said it, at least I thought it. I said if for whatever this thing goes into a significant sell-off after the earnings, there's massive support around $39.
Yep.
I'm sticking to that support. I'm going to say $39 is the level that this thing absolutely needs to hold. If it breaches that, Katie bar the door, but we're coming down so hard. I gotta think it's maybe going to bounce. What's the pre-market low here, Joel?
Yeah, that's you're making a great point there. Pre-market low is 39.25.
Oh, it got there. So I should have my bid out there. I'd already bid up $2.
Yep.
So the pre-market low coincides with this. It's the levels are all over it on the daily. It's a huge level. 39 is like the level of all levels.
Yep. 39.01. That was your low on February 6th. 39.10 was your low on January 16th. And then you got a little bit below, but yeah, I mean, you're down $10 and you had the 15-minute chart up there, Spencer. You got the daily. Go to the 15-minute. Let's see if they can illustrate. Is that 15 minutes there? Someone's bringing in some stock here, 40 and under. They're waiting it. So would I be trying to dead out long there? I don't know. But if I was short or had some puts or some options I wanted to cover, I mean, there's someone bringing stock in here under 40. And I think the low of the day even may be in here. I think you might get a little bit of a rally in Roku today.
I like the 39 level. Below 39, I don't like it, though.
39 to 40, Dennis.
I like it at 39.25. I hate it at 38. Yeah. Every analyst doesn't understand that, but that's the way I'm talking on the technicals. Hate it at 38, love it at 39.25. So if I'm buying it at the 39s, I'm stopping out below 38.
Okay, all
give
right.
Yourself. It's a mover. You got to give yourself at least $1.50, because it's a mover.
Yeah, traded down on significant volume.
Pandora earnings last night. Also raised guidance, I believe. Details, Spencer.
Yeah, they had a large increase in paying subscribers, but as far as EPS goes, a 38-cent loss versus a 21-cent loss in the same quarter last year. Not super relevant because again they're losing money, but the big thing from yesterday was the guidance raise, and which they discussed on the call. There was not in the release, and an increase in people actually paying for Pandora, paying subscribers.
They got paying subscribers. Excellent. $4.87. They hit this thing ahead of the report. It's bouncing a little bit. The level that I'm going to keep is yesterday's low, 486. That's the level that this needs to hold. If it goes into retreat mode, takes that out, I want no part of it. It needs to get above 550 before I get bullish this thing, because you got the double top from the last couple of days of 547. I'll round that up to the big psychological level of 550. That's where it needs to get to for me to get interested.
Don't even need me on the show here. I mean, you just
I took all Joel's stuff.
You just took all my. I mean, I wonder where you learned your technical analysis from here. The only thing that you're missing in your analysis is you got the double top there. You also had a high at 539 on February 2nd. And then in 3 out of 5 days back in late December, you had 3 highs between 534 and 540. So that is the level. If you get a pop, there have been sellers there several times over the last couple months. And support, it did have a weak close, 486, 47. So shorts may want to bring it in there as well. 49 was your 4-day low as well. Trade the
Let's
range.
talk. Do we got the Jack in the Box numbers? JACK. I know it hasn't traded here this morning, but it was due to report, and it was trading up last night in the 88 handle. Whoa. So I'm assuming they reported decent numbers.
Yep.
JACK.
Yep, they reported last night $1.23 versus $1.06. Sales $294.4 million versus $283 million. So good EPS and sales for Q1. Fiscal year guidance, same store sales for the fiscal year up 1% to 2%.
Some activists in here too, is there not?
There's activists in like every restaurant stock. So.
They're all on there.
Hey, don't worry about it.
So. The activists give you that underneath support that you need there. So I kind of like Jack in the Box. I don't know if I'm paying up $2 for it, but if it was ever to come back down that 85 level, that's interesting. That 1.84% dividend. Restaurant stocks have been fairly hot lately. I mean, ever since we had really what kickstarted it was the takeover there on oh man, well, who was the one that got taken over that I was mad about? Buffalo Wild Wings. Yeah, BWLD. I mean, that kickstarted a lot of these restaurants back in November, December. But you've had Chipotle come back a long ways here now. I don't know. I'm not against picking and coming here and calling a bottom here in the Jack.
Panera was before the Buffalo Wild Wings.
Panera did start it. Yeah, that was a huge.
Do they have Jack in the Box in Canada? I'm just curious.
I don't know, because it's a West Coast thing, right?
Yeah,
so
they used to have...
I live on the East. I'm an East boy. I'm over in Windsor here, so I don't know what they have out in Vancouver or Calgary or Edmonton out in the West, but I know they don't have them here.
They have Tim Hortons. Let's see here.
Because coffee shops are comparable to burger shops.
Okay. I don't know. I could just give you some levels on the upside here. Trading up $1.90 at 88.98. We're above yesterday's high. Just keep, if you're long, just keep an eye on those 2 daily highs. Monday's high, 90.57. Not Monday. That would be Tuesday's high, 90.57. Friday's high, 91.75. And you had your close right up there as well. Coming back on the downside, yesterday's low and close right by each other, right at the $87 area. So I will give that as a support level.
Spoos are coming in here a little bit. We're coming almost back down to flat here, Joel. So we're winning your bet already. You're already up 20 cents on the spot.
You went out?
You're shaking me a little bit here. You're shaking me. All right, jump over. Keep going in the earnings parade here, Spencer. It's a lot of mid-tier. Not a lot of huge names out there, but there's a few. Car last night, and it's trading up significantly here. Avis Budget, best ticker symbol car. $4.54 trading up. They must have blew it away.
45 cents versus a 22-cent estimate sales of $2 billion, which was in line. So fiscal year guidance coming in higher, 9.2 to 9.45 billion is what they say. 9.09 was the estimate. EPS guidance coming in line, but they blew away the Q4 EPS number again, 45 cents versus 22 cents.
Big pop here for CAR. One concern is that you are running into a lot of overhead supply up here. We had a lot of level. Yeah, kind of head and shoulders. Back December, you had the left shoulder, $45. Then you had the head right up to 49, and then you had the right shoulder. It's kind of a sloppy right shoulder, forming around 45, and then it sold off. So that pattern formed out. Now you're back at that neckline again while you're buck below it. So I don't know. I think there's major resistance up at 45.
You know where I think this company was founded?
Monroe, Michigan.
No. I think Ann Arbor. I do.
Ann Arbor. Was it?
I think so. I don't know. I don't want to.
Sometimes Joel dreams stuff up though, so you got to do a fact check on.
I don't want to. Warren Avis here. Yeah, born in Bay City, Michigan. Yeah, I think so. Let's go to
He's a Wolverine fan.
There's a big pop here. Your initial spike took it to 44.84. But now you backed off, found support at 42. Now at 40.
That coincides with the 45.
Yeah, I don't know.
Those levels work, man. Just imagine, though, it got up to 44.84. You had the whole double top, 44.67, 44.44. I guess you just got to be out there after hours and say, get 44.70, 44.75, good enough. You'd already be up $1.50.
Yeah, I think that's
those levels, Joel. You should patent that stuff. That stuff works.
It works, but you got to be quick there. You did trade up. I mean, you're fine. I'd say this holds 42. I know that's like another buck away. Under 42, 40.28 fills the gap. If in fact you can like barrel your way through here through 45. I mean, there's even a pesky. I don't know. It's not going through 45, so I'm not even going to give a level after that.
Cake, another restaurant stock, Cheesecake Factory, CAKE, Spencer. They reported last night stock is trading slightly green. Thoughts on the Cheesecake Factory?
Yeah, I'm not sure if there's an activist in here, but I'm just going to assume there is because there's always one.
Because it's a restaurant.
53 cents which was in line with the estimated sales of 571.8, which was a slight beat. 571.6 was the estimate on that. So they pretty much in line. Q4 earnings report for Cake.
It's trading up. Your level is $50 on this. These are easy levels. We're a long ways away from there, but if for whatever reason it got up to there, that is where the major resistance comes in. $50, what I'm going with as resistance.
Another interesting story about Cheesecake Factory. The guys from Michigan that started the company. And
holy cow! Is it all Michigan people that started every restaurant out there?
He would not open one in Michigan for the longest time. He didn't get some tax incentive or something. But man, their portions are too big there for me. But the stuff
I like big portions. That's what I'm into is big food. That's why I didn't like that burger joint, Shake Shack. The burgers weren't big enough. I want to leave full. So I like Cheesecake Factory.
Mounder resistance here. We're trading up 28 cents at 46.50. 47.09 was the high from yesterday's session. But if you go back just for the month of February, every time the stock poked its head above 47, getting as high as 47.48, could only hold it on the close one time here. So I think there's sellers from 47 up to 47.5 until it cleared that. I don't even think you see $50. I think there's a seller lurking in the 47.
A lot of resistance.
Yep.
A lot of overhead supply here. So yeah, hard to come in here and be a buyer. I'm on the same size. You're not going to get a bet on me on this one.
Okay.
RGR Gunmaker last night reported earnings. Sturm Ruger. Not a lot of action here. Did make a few trades up in the 47 handle, but was fairly quiet after the report. It actually traded down to 45 as well. Really, we're still in price discovery for Sturm Ruger. Give us the numbers of Spencer and we can do some analysis.
56 cents was the adjusted EPS. I don't think there was an estimate on that. Sales of 118 versus 134 million dollars. So they missed the sales estimate. This is, of course, a very interesting time to be a gun stock.
Yeah.
So
it's going to matter, obviously, what's happening with regulation with guns. Is something happening? We got Trump tweets about stuff like this now. So there's a lot of external factors here that are going to apply to Sturm Ruger. If we're just purely looking at the technicals, we got to hold $45. That's the level. If it doesn't hold there, that's trouble. So nice dividend, 3.36%. $45 is the level that I think it's got to hold. And below there, I wouldn't want any part of it.
It did print 45 and it did get a bounce off that. Not much volume traded at 45, at 47. Spencer will pull up the monthlies here in just $45. You talk about monthly lows here. You've hit it in 4, 5, 6 different times here. And this is going all the way back to 2015. So that 45-year long-term level here. A lot of overhead supply. If we go into any kind of rally, you did have the street leaning the right way into this one. Tuesday's high was way up at 50.60. So street got this one right going into the report.
The one thing I want to say, actually, going back to Cheesecake Factory for a second, whenever we talk about that, I always think about this note from Credit Suisse that was came out 2 years ago. Basically using Cheesecake Factory as an indicator to look at Nordstrom, because there was always Cheesecake Factory next to Nordstrom. And so Nordstrom's does report March 1st. So coming up here. So I just wanted to throw that out there because I always think about that Cheesecake Factory. The analyst was like, they're pretty good. It's a pretty good predictor of what Nordstrom sales will do, because
you just gave me a new pair tray.
Because there's always
I would have never,
according to this one analyst,
together with Cheesecake Factory.
according to one analyst, but I always thought it was a really cool indicator. So Cheesecake Factory and Nordstrom.
Well, they're at the big malls,
right? And they're always next to each other.
Yeah, and there's always a long wait at the Cheesecake Factory too. I mean, what you do is you put your name in at the Cheesecake Factory, and then you go shopping at Nordstrom's, and then you come back. And that's a great analogy there, Dennis. Figure out the ratio on that one, Dennis.
It's okay. Moving on, you want to go to Wayfair?
Yeah, sure.
All right. Wayfair, Q4 adjusted EPS, 58-cent loss, which was 6 cents more than the estimate. 52-cent loss was the estimate. Sales of $1.439 versus $1.36 billion. So they beat on the sales number, but they missed by 6 cents on the Q4 EPS.
They sell like everything there too, don't they? Like furnishings, online furniture store. Is that what it is?
Yep. Yeah, they sell everything.
I went on there looking for a carpet once, but nothing was cheap. So anyways, that was my experience with Wayfair. I went on there and I was like, this stuff isn't that cheap. And I moved on. I gave it about 5 minutes of my time. $7 down. What are your thoughts?
Isn't Andrew Laff been bearish this one for a while? Yeah.
Is this a Citron? Is this a Citron bubble buster stock?
Yeah, I think he has. Yeah.
I think in the past.
His thesis, which this is from like a year and a half or so ago, but he said he told us that they'll never make money, is what he told us. So yeah, he's definitely bearish.
Okay. All right. Never make.
Well, big psychological level of $100. It just kissed through that $100.14 2 days ago, and now you're 9 points off there. So that looks like a shiny top to me, $100. So I'm out. I think this stock after this earnings report, maybe it bounces back, but if it closes in, again, starts closing below $90, trend kind of breaks here. Close to breaking.
Yeah, 86.50 though. You hit that on 2 brackets, and then you came down again and you hit 86.30. So if you're looking for a daily level to perhaps a couple of short, we are now over just about $3 above that. On the daily chart, if in fact we do get that and you see it get down to 85.57, that would be a good level. February 9th low. Also a bunch of lows in that area back in January, right in the 85.5 handle. But if you're real bearish or you're looking for a real pullback here, I don't know where you want to figure a retracement from, because this stock has had a heck of a move. But we've bounced off the pre-market low. Keep an eye on the 85.5 area if that's breached.
The stocks that have reported disappointing earnings in the last few days continue to get hit. And Walmart is a prime example here. There was people, talking about, maybe we should pick some Walmart up yesterday. And we were saying on the show, I'd be a seller of the rally. And if it takes up that low, it's probably going to be in a world of hurt again. That trade worked perfectly yesterday. The stock opened up $1. That was basically the high tick, and then it leaked all day. It hung around for a little while there at that 94 level from the day before, but then just went right through it, and obviously went down another 2 points after that. So these stocks what seems like when they report, at least right now, they're not bouncing back right away, and that's a word of caution for Wayfair. If this thing doesn't turn it around on a dime, if it ends up closing down $7 or $8, usually the next day is not going to be that great either for it.
Yeah, that was a classic setup in Walmart. We were talking
Really
about
was.
that.
That up open,
Yeah.
up a buck, man, that was a gift.
It was up a buck, and then someone asked for resistance. I said, look at your daily pivot. And I remember it was 95.38. It got to 95.34. And then it was kind of like, oh, I should have sold my Walmart yesterday. You know, it was like, oh, it had a bad report. Well, I'll see if it's going to bounce. And then people get home, line in, you know, log into their accounts and like, oh, I'm selling my Walmart now. And it got very close to filling the gap. And I think DC won. I think someone was holding out for a gap fill. And I think we mentioned that on Tuesday. You need to get to 90.85 to fill that gap. That was from the last earnings report. You only got to 91.24, I guess close enough. Horseshoes and hand grenades there, but starting to build some support. We'll see what happens if it can fill the gap.
What happened with Campbell Soup yesterday? Because not that, you know, it's related to Walmart, but it's more of a defensive stock. And this thing absolutely got annihilated. What was there? Some commentary or something yesterday? Some presentation they gave? It must have said something really bad during that presentation, because for a food stock to fall $3 intraday, like look at the chart, look at the candle on Campbell Soup. There was some presentation they were giving, and it started getting hit, and it just got hit all day, down $3. That's a huge move for Campbell's. CPB we're talking.
Yeah, this was before the open. The president will offer overview of strategy progress on transformation at 11 o'clock at the CAGNAY conference in Boca Raton, Florida.
They did not like that strategy.
Yes, whatever they came up with,
it's not liked. That's new lows. You want to talk about some stocks, and we haven't talked about this sector for a while. Some of these food stocks have been absolutely annihilated. I don't own any of them really in my portfolio, and I'm starting to think about buying some of these because you know how I'm a long-term contrarian investor. But I had Kraft Heinz on my list here for 3 or 4 days now. It keeps going down every single day. KHC, I'm talking. But this stock was $80 back at the beginning of February. It's now 67. The Kraft Heinz dividend is now 3.69%. I mean, a little bit to do with interest rates. Obviously, these stocks trade a little bit with utilities and TLT, and TLT has been weak. But, you know, you had Kraft Heinz at $97 back in, you know, February of last year, so 1 year ago. Now it's 67. So if you want to talk about a sector that is significantly on sale, these food stocks are. Campbell Soup as well. Like, we got to go back to the monthlies to find these lows. We've not been this low in Campbell Soup since 2015. So we're going back 2.5 years ago to get down to these levels of $42 on Campbell Soup. It's got a decent dividend too of 3.26%. So there's a couple of food stocks. General Mills is off its highs as well. Remember back like a year ago, there was even M&A rumors and stuff in there. And I know Hershey actually was just saying that they're looking for something. They said this last night. They're looking for some acquisitions. And they're not looking as big as these companies, but they're looking for some smaller acquisitions. But I don't know. What do you think of the food stocks? They're cheap right now.
I think I don't know exactly why Campbell's sold off the way it did, but I think the biggest headline I saw from the comments I made yesterday was that the CEO said that they want to shift towards snacks. They say people are snacking more than ever, and so they want to shift their products to be more snack products and maybe less soup products or meal products. But I don't know if that's specifically why they sold off, but that was, I think, the biggest comment that I saw from yesterday's conference. I don't know.
Price don't lie. Whatever they said, the market didn't like it. Now, I don't know if we should catch this falling knife. And I've always, I've done this in my investment. I don't do it as trades. I wouldn't be covering these things for trades. But as long-term investments, sometimes I don't mind trying to catch a falling knife, coming in for a little bit and then coming in for a little bit more. It's probably a better strategy to wait till they stop going down. And then, maybe get a day or two where they consolidate a double bottom and then maybe strike. But I'm putting these all on my radar for long-term investments because sectors that are hated, eventually those sectors turn around. And sometimes it's the way you can make some money.
You don't like tomato rice and grilled cheese from
I like grilled cheese.
Very, very good soup. These stocks are tough. I mean, they're continuing to make new lows here. I think the most interesting one on the chart to me is probably Hershey's here. Going back, you had some M&A rumors here. This was late in 2016 that they were going to get taken out. man, hit 115 a bunch of times, and then it's coming back. So of all these, Hershey's coming into this 94 to 96 level, currently trading 96.89. That's been long-term support, but I don't know. Is it like the whole Amazon effect? I mean, are they, are you going to have Amazon soup now that's going to take over Campbell's soup or generic labels? I don't know. That's what I think is probably is what.
Well, I mean, I don't understand that, because you say Campbell's or Kraft Heinz, are they really attacking them though? Like they were attacking Kroger and the stores that are selling them. I mean, you could buy canned soup online, or you will be able to probably eventually if you can't already do it. I'd be shocked you can't do it. I don't see why canned foods get Amazoned. So if you're looking at Heinz,
he's not saying that.
Or Campbell's, he was just I don't know. Are they Amazon proof or no?
I don't know. Who can say?
Who
can say what's Amazon?
I guess
proof
they can
and
attack
what
anything. They come with Amazon food. Amazon packaged foods,
so
I guess nothing's Amazon proof, but I don't see them being attacked as much as like a Kroger is what my argument is.
Right, okay. Not now. I want to go back 1 second. Speaking of Wayfair and Citron, we had actually just reached out to him a few minutes ago. He got back to us. Citron's response to Wayfair's Q4 earnings report. He told us, it reaffirms my belief that this company is running a terminal business model. Furniture and home goods are designed for omni-channel retailing.
Terminal. What is this word?
Terminal business model. So still bearish. Nothing's changed.
He hates it.
Hates it.
Yeah, that's a good thing. It's a big statement there. Terminal. Okay. Terminal business model. So Andrew left not a fan of W.
Should we do one more earnings, or you want to hit some?
Let's do balances. Okay. Bank of America, big one, 379,000 to sell. Bank of America had a huge sell and balance yesterday. That is now a trend. 2 days in a row, we've seen big sell and balances in Bank of America. So some institution is using this rally from the last year to lighten up the last 2 days. So keep an eye on that one. Full disclosure, I am short Bank of America as a trade. Reason I am short is because I thought there might be some follow through from that imbalance yesterday, and that is working out this morning. Johnson Johnson, 25,000 to buy. GE, 66,000 to sell. Like we said, there's a sell balance in GE every single day. Man, they're small. I'm scrambling to find anything as of note. Even Square is 26,000 to buy. HPQ, which reports tonight, it's 49,000 to buy. They're real small.
I just want our traders, if you're trading any of the financials, Bank America or Goldman or some of these other ones, you got to take a look at this XLF, and we got a hard top in here. Tried to poke through it yesterday. You had 3 highs in a row, right about 29.20, and then it got everybody in the pool when it went to 29.40 yesterday, and then flushed out, closed at 28.93. So it's over the 50% of the move, but your XLF right now is digging in here, providing major resistance. Bank America is having that same formation at the 32.40 level. Haven't looked at Goldman in a while. Goldman, oh boy, that's a triple top at the 270 level. JP Morgan, JP Morgan's probably a little bit different. I think it had a big day. JP Morgan made new all-time high yesterday, but that was right in the area of 3 other highs. So keep an eye on that 29.30 level in the XLF.
One minute here. We're going to go grab Tommy. You want to sneak one more in?
Yeah, let's do one more. Let's sneak in.
What's on your radar?
Let's sneak in Hormel. Hormel, HRL.
Food stock.
That's what I think. Lots of food stocks this week. This is a food stock week. Q1 EPS 56 cents versus a 44-cent estimate. Sales of 2.3 versus 2.41 billion dollars. They're raising their outlook, their EPS outlook for the fiscal year as well, and that's all they got. So good report.
This is sentiment. So you know what? Numbers didn't even matter here, and I wish I would have saw this yesterday. The Campbells and the Kraft, because coming in here short and Hormel ahead of this food was probably a slam dunk. They even beat the numbers, and so the guidance was okay. It doesn't matter. Food stocks are absolutely hated right now. They will find a reason to sell them. If there's anything said, or the revenue is a little bit light, they'll hit it for that. It's down $1.18. I want no part of this one for the simple reason is that food stocks are hated. I think this thing could test $30 today.
Ooh, wow. That's a pretty
31.50 in the pre-market. And the way I saw Campbell's get hit, the way things have been getting hit. And if you go out and look at this on a longer term chart, this has not been hit nearly as hard as some of the other ones. Its dividend is lower there too. I'm a seller of rallies here on Hormel, even though the quarter was okay. Yeah. I just think that they don't want to own these stocks right now.
Is it offered there?
It's 32 and a quarter offer, okay. 31.02 bid. It's really wide, but I think that 32 quarter. I agree with that 32 quarter seller. I think I'd be a seller there too.
Bulls better make a stand here. Your February 6 low, which was the former low of the move, was 31.71. You're now trading below that. So Bulls better step up real quickly. Dennis's level that he mentioned, 30.69 was a monthly low in November, but the one he's more interested in is that October low of last year at 29.75. So maker of spam that looks to trade in the lower 30 handle today.
All right, we'll be right back with our guest today, Tommy Lackey, managing partner and PM at Relativity Capital Advisors. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick, and we are on now with Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Tommy, how's it going today?
Doing great. How you guys doing?
Doing great. It's been a while since we spoke. How did you react to the volatility that we finally got this month?
Well, it was interesting, and I think it's one of those things none of us know exactly when it's going to come, or how the magnitude that we saw it. But you expected something. We did okay. We lightened up a little bit going into it, just naturally taking some things off because they had done well. But of course, as you look back, you wish you were 100% cash. That's just life. So we did well, and we're bouncing back with it pretty well and getting some new positions in here. But we're still looking at the idea of making sure we get nice bases to work off of. So we haven't rushed back in. We don't feel any need to try to push it and get the very bottom. As long as we get new setups, that's where we want.
All right, you sent over some notes, and I want to just kind of walk through a few of them here. So I'm going to pull up a chart of Facebook you sent over, and why don't you kind of break this one down for us here?
Yeah, sure. And a lot of people look at, there are faster movers and things like that than Facebook, but with our process, we look at obviously things that have good trends, good fundamentals, as well as good options flow and a chart we can work with. Facebook's definitely an example there to where looking at its particular chart here, it's just bunching up right below the moving averages after breaking down and then working. It held above the 170 level where it had some previous support back from December. And so now we just work sideways a little bit, and I see a move over to say 180, 180.50 range, somewhere in that area. I think I have 180, 150 on this scenario. But I look at this almost as a trade against on a lot of these trades, to where if you wanted to try to enter early, you can because you're closer to your stop. But if you want to see the momentum first, which a lot of short-term traders do, breaking over those levels still gives you a pretty tight setup on this one, looking at only about a 4.6% risk on the trade. And that gives you some room to maneuver. But I believe this one can break over those moving averages. The on-balance volume is building back up, and I like the volume pattern we've seen down here near the bottom.
All right, let's move on to another one here. Let's look at Microsoft. Tell us what you're seeing here.
All right, in Microsoft, it's kind of a similar setup to where it's a little bit higher. It came out of its first base, and now it's flagged across a little bit. You got some moving averages down there as support. And then if it breaks over this, I think it goes towards the new high scenario. Now, Microsoft's another one that has a lot of good, notable options flow on the bullish side above it. And one thing I didn't write on my list today, but I want to make sure, is all my options flow work and all that comes from Options Hawk. and that's Joe, which I've talked to you all about before. And I am trying to work on him about maybe coming on sometime. He's got a lot of stuff to do in the mornings, but we're going to maybe see if we can work on it sometime in the future. But in this particular scenario, the upside bullish action on this has been great, and it's holding up well. It's a large play, so you don't expect real high volatility in it. So you can again have a pretty tight stop and try to trade against this one.
Let's move on to let's look at QRVO.
Okay. QRVO one, it's an Apple supplier. It's one that has had some issues back at the end of last year, had a good earnings, and then gapped up, and now it's come down to close the gap for the most part. It didn't close the whole gap, which I always like when it does not close the whole gap, because that shows there's buyers that are willing to step up before that happens. And now it's trying to move back over the 80 level in a big volume at price. If you look over to the left side of that chart, you'll see the VAP bar, the blue little bars that are coming out the side. There's a lot of volume in this area, so it moves back over it. I think it can start moving pretty quickly.
We've been talking a lot of food and restaurant stocks this morning, Tommy. You got one on your radar here, Denny's, DENN. What do you see there?
Yeah, Denny's had its earnings earlier this week. It gapped up, and then it came back and filled the gap pretty quietly, and then moved up yesterday and moved back above the 8, 13, and 21 EMAs and held those gains into the close when a lot of other stocks didn't. I think those are a couple important factors to look at, like on a day like yesterday when a lot of things sold off. Something that is going to hold into the close its gains, you got to think of there's some strength there when people didn't want to let go of those shares in a sell-off like we saw. So I think it's a scenario to where we look at this as a pre-breakout move. You try to get in before the breakout and look for it to move over 1550. You got a little wider stop here. So I do want to say you want to make sure you position size accordingly. The wider your stop, the smaller your position size.
Moving on to one we don't discuss a lot, Commvault Systems, CVLT is the ticker there.
Yep, another one that kind of jumped out at me. It's one that doesn't have a lot of flow, and actually the flow in here is a small put flow. But one thing I did like about it is that you have this failed breakdown last week. I guess it's about a week and a half ago. You had a failed breakdown that moved right back over, and then now it's bunched up under those moving averages again. Same kind of scenario. I think if it can pop over these moving averages, your next area to look at is around 54.50 to 55. And then from there, you got a pretty big gap to close going all the way up to about 57.50-ish. And that's a nice move from here. Again, if you can get through and get up into that gap, it doesn't necessarily have to stop at 57.50. That's just would be one of your major reevaluation points.
Thoughts on Walmart?
Okay, Walmart, I heard y'all talking about that earlier, and I think I agree exactly with what Joel was saying. Is the scenario that this is one that you got a gap close just below, and then the low of that gap close coincides with the 150-day moving average below as well. And so that's kind of a scenario where you could use that as somewhat of your stop point around the, I actually put mine a little lower to around the 89 because we're so close. So you can give it a little room to maneuver. And a lot of my stops on these larger plays that are not typically incredibly volatile are going to be close under stops. So I'm going to close them at the end of the day if they're still under that level. Because in a more volatile market like this, you're going to get a lot of intraday moves. Now, it does open you up to a little more risk, but on this one, the stop's pretty darn tight anyway, so you can handle it. But I think this is getting close to a bounce play. I think it's moved pretty far down on the information. And one of the things that Joe pulled out of the earnings that he was really impressed with was how much their e-commerce growth was. It was 23 or 24% year over year. And, you know, this is a place that everybody talks about Amazon kind of wiping the floor with them. That kind of growth year over year shows they're starting to put some initiative there.
Gilead, G-I-L-D.
You know, this is one, and I think I saw something about them. Did they buy SGMO this morning? I haven't read that, but I heard someone saying something about them with SGMO. But the reality of Gilead is it's finally starting to kind of come off the forgotten about list, I guess, maybe the way to put it. And it's it came off the highs pretty well after moving real good in December. And now it's just bunching up. Now it could end up going either way, but you can keep your stops pretty tight depending on how you want to play it. And again, on this one, the options flow has been incredibly bullish since mid to late January, and just continues to pile in there. And that's always a good sign. You know, that's an example last year that just and continues is I believe they started piling into Micron when it was at about 13, and they still haven't stopped. And so yes, you're going to have pullbacks, you're going to have things like that, but you got to keep your eyes on names like that when they just continually pound the options on it, even after it has moved big. You've got large institutional players not giving up yet.
Question from our chat here, Dr. J asking about Clovis Oncology.
All right. CLVS. This is one I don't, as far as the chart, the only thing I really don't like about it here is being that far under the 200-day moving average. You know, in this particular market, there's so many things that are still holding over. The question is it worth trying to fight with these things that are under? However, it's starting to get some flow back in it from a put and call side. And we did see some big risk reversals come out in 216 were put on this particular play down in the 55-60 range. You know, and it's basically a scenario to where people are now starting to bet on the upside on the calls. The only issue I'd say I have here is that under the 200-day, from a flow play, I think it's one that you want to see a little momentum. So you want to see it get over these tails. But once it gets over these tails, I think it could be worth a shot.
And Spinner in the chat pointing out, Gilead didn't buy SGMO. It was a big investment that they had made.
Okay, thank you, Spinner. Appreciate it.
Joel and Dennis, you guys have any last final thoughts for Tommy? Anything that was on your
No, Tommy, Dennis, go ahead. I'll let you go.
I was going to ask, just overall, you touched on the market just a little bit on the volatility there, but obviously you guys, you know, they're big options traders too. You work with Options Hawk, and what are your thoughts here? Like, premiums must have exploded there last week or a couple weeks ago when we had all the volatility. Is this just, like we have Nick Shaheen on a lot, and he's an options writer. Is this the opportunity to come in there and start looking, at different stocks and writing puts on stocks you might want to have and extracting some of those big premiums? How do you guys adjust your trading strategies when premiums explode in the options market?
Well, there's a couple of things. One is that obviously you do look to more of the put side and selling puts when you can, when they get real expensive, when you have levels. Actually, more so a lot of times we'll look to see other large institutionals selling those puts into blood, and then we'll trade against those levels, try to get in as close as that. Now, on the other side, though, one of the things that even though we do a lot of options work, the way we do ours is we tend to stick very, very deep in the money. So we're trading them almost like stocks instead of like a lot of people will do is do out of the money and just hope it gets there. We keep our risk reward so tight on all of our plays. It just doesn't make sense a lot of times to go and pay pure premium for out of the money stuff. We have more control over how it trades and how we trade it with the chart and the price of the stock, the deeper in the money we are.
No, good point there. More bang for your buck. For me, my question is just overall market related to, you had your all-time high in the S&P down to that low, double bottom, 25.29. Just for me, I'm keeping an eye on this 2700, 2703.75 is the exact 50% retracement here. What are you using to determine, whether or not, this just a rebound to fade here to go to retest the lows, or, hey, that was just your dip. You missed the buy the dip. You got to get in here, going back up to all-time highs.
I think you've got to be realistic and plan for both. I mean, unfortunately, you've got to be open to both. And that's why I said that instead of rushing in down here as it bounced off the lows, we're looking for good bases and individual securities that we can trade off of. They may be low and they may have taken a pretty big hit, but as long as we got a level we can trade against and know where we want to be out, it's worth a shot. Now, as you notice, a lot of my stops are tighter this week, and that's because the chances of a retest are getting up there as we move down, like you said, to that 270 level, and below that, it starts to open, get a little more hairy for a solid retest. But that solid retest, I would most likely be bullish on unless I saw the new lows break out, which I just think there's a lot of things still going in our favor. So I'd be open to it, but it would surprise me.
All right, Tommy Lackey, Relativity Capital Advisors is his firm. He is the managing partner and portfolio manager over there. Tommy, it's been a while. Good to hear from you. Thanks for coming on.
Thanks, guys. Y'all have a great rest of the week.
You too.
Thanks, Tommy.
All right. Yep, you can go.
Yeah, I was just gonna say, S&P's knocking on the door here, trying to get Dennis a steak dinner.
I'm up in that bet now.
You are up in that bet. Just don't know about this open here. We're trading near the highs of the deal. Your pre-market high is 0950. A lot of people probably caught stock on the close that they didn't want, probably the bad close. So I think it's going to be real critical here. 0950, I'll let it bounce. I'm looking maybe to get up to 2714. But if we don't clear that in a hurry, I think we got some work to do under 2700. So a lot of times these pre-market highs and lows are very significant within that opening stanza. Dennis, how are the stocks? Are the stocks moving up commensurate with the S&Ps here?
Yeah, slowly we're seeing some pressure on a little bit of the financials, and that's to be expected here because you got the TLT trading significantly higher. And you know how I like that trade where I look at obviously TLT versus financials. TLT is up 70 cents. That's going to help your utility stocks. It's going to help your REITs. It's going to hurt stocks like your financials here this morning. So if you look, Bank of America is trading in the red. It's also got a sell imbalance this morning, but I'd be careful in that sector. So if you're looking at stocks, saying, wow, why are the banks not trading higher here? Well, that's because the TLT is trading higher. So that's a reason there. It's mixed today. Like there is some sectors that are looking weak. We talked about the food stocks already. That's just been weak. It seems like every day. You're seeing a kind of, I feel like a Groundhog Day a little bit with Walmart, the bounce back again. I almost want to fade the Walmart move here again today because it worked yesterday so well. We're trading up 50 cents. Walmart does have a buy bounce. Again, only 18,000 shares, but that could grow yet. If we get a higher open here in Walmart up 50 cents or 70 cents, I might try from the short side here again, just because I feel like there's still sellers in this market for Walmart. So isolated opportunities here. S&Ps are bouncing around a lot. You've really got a mixed market. Oil's trading a little bit higher. We've got the USO trading up 9 cents here now. So some of your oil stocks might show some life, but they've been in the gutter here. I mean, you look at, we talked about ExxonMobil, and I was saying yesterday, I think I'm early. I still think when I bought that in my investment portfolio, I still think I'm early. I still think ExxonMobil might test that $70 where I'm going to add to that investment position if it comes down there. But the oil stocks just don't want to bounce. They're bouncing a little bit this morning, but overall, these things are ugly. Check out Chesapeake Energy. You want to see an ugly one? CHK, 4.25. Obviously, it's a lot of natty gas, but 4.25. It's down to 263. I mean, it's been an awful month for Chesapeake Energy. You're talking about a stock losing 30% of its market cap just quietly. And a lot of these energy stocks, they've had a horrible month, and they have not bounced back. Overall market has bounced back, but the energy stocks themselves, the USO has, the energy stocks themselves really have not.
It was Chesapeake. Was that the one with the mysterious death of
Yes.
Omri McClendon? Yeah, I remember that. That stock.
He bet on his company hard. Like he went in and he had, remember, options and stuff, and he had bet on his company so hard, and the stock collapsed, and I think he lost a lot of his money. I think that even, he was a guest on Mad Money frequently there, and I think he owned up to it and said how much, he was one. I believe in my company. I'm betting on it hard. He went and he was basically putting all his money in it, borrowing money to buy his stock, and it didn't work out. And obviously, if you look at Chesapeake Energy, I mean, it has been. You could say, oh, it's $2. Had a rough month. I mean, it has had a rough 10 years. This is like $70. What's the all-time high in CHK?
Let's see. Let's go. I'll have to pop up my. Oh, yeah, good call there, Denny. That stock got to 74 even. Wow. Right on the nose. That was in July of 2008. What a coincidence. 74.
And it was one of the biggest losers in my investment portfolio. This was one when Omri McClendon was betting hard on it. It was like, I'm going along with the CEO. And I had bought stock in the 30s. And it just was not a good buy. And obviously came down. I wrote that off for a tax loss. I feel like I sold it at like 12 or 14 bucks back 3 or 4 years ago out of my invest portfolio because it just wasn't working out. And it was good. I took the tax loss, and now the stock is $2. So I'm happy that I did that. But it was an ugly one for my portfolio as well. But I went along with the CEO. He was betting so hard on his own company. I was like, this guy's running it. He's betting that hard. I'm going to bet along with him. Sometimes following the insiders does not work, because that was one case that did not work out for me or for McClendon.
Moving on here. Let's go to the ratings. There was one that caught my eye. I mean, there's a couple this morning, but the one that really caught my eye was Helios and Matheson, HMNY.
Oh, yeah.
catching an upgrade an initiation from Canaccord and at a buy and a $15 price target for HMNY.
It's big pop. This is one I'm not going to fade because there's just nothing in here. So you could go up to 586 with ease and still be ugly on the daily chart. So it's up 10%. It's a nice lift. If this thing pulled back anywhere into the mid 450, 460 area, I think I might actually be trying this. I don't know long term, but short term here, this is going to give the bulls at least a breather for a while. Stock has been just absolutely ugly. They did that secondary, knocking the stock down further. I mean, this thing got citroned right at the high. Stock was up at $37, and Andrew Left came out 38.85 and said he thought the stock was going to trade down below $20 in a hurry. It traded down below $20 that day, I think. So he had a quick cover, I believe. It was a good trade for Andrew Left. He makes tops happen. So he's the bubble buster. He broke this bubble, and obviously it's been ugly ever since. I mean, now you're shorting the stock. If you come in here at $5 and short, there's not that much meat left on the bone. I guess if you think it's going under, there's meat on the bone. But I've never made a lot of money shorting stocks under $5.
Yeah, still having a whole little problem with the entire concept. People going to movies, paying up for the movie pass. Spencer, you mentioned your experience with it over the weekend. You talk about, trying to value a company here. I guess this is a holding company. As big stake is in Movie Pass. I go to my Benzinga Pro. I see the last earnings report in January of 2014. So I have no way to value the company. And since I don't have, much stock, much faith in this Movie Pass thing here, hard for me to get excited about it.
They own 78% of Movie Pass. HMNY does.
Yeah, it kind of seems like Netflix has kind of got them, but I don't know. I guess if you still want to go to the theater.
It's a different concept. It's going to the movies, which people like to do. I like to do. I don't go enough for it to pay for itself, but I think
there's not enough good movies to pay for that thing.
Yeah, they don't make good movies anymore. Do they, Joel? Me and Joel old school. We like the older movies. They don't make them like they used to.
Yeah, like this.
They don't make music like they used to. I'm stuck in the 80s. I like my 80s music. I listen to that all the time. Kind of drives my wife nuts, but I've always been a huge 80s fan. I like the 90s too. It was a little bit of the grunge. That was when I was in high school there, but 80s and 90s, they don't make the music like they used to. I don't like any of this new stuff. Spencer, do you like this new music, or are you stuck in an era too?
Define new.
Like anything that's being made in 2017 or 2018.
No, I mean,
new country, man. That's where
it's not even like.
All right.
Anyway, so I don't like the new movies. I'm an old school guy.
Okay.
They don't make stuff like they used to.
All right, did was that the only notable ratings change there?
They're quiet.
It kind of was. There was as far as upgrades, nothing that's really interesting. No double upgrades or anything like that.
They're all small.
They're all small.
The analysts are on vacation right now, I guess.
Downgrades equally small. Initiations. Really nothing. The
analysts are on vacation, and you know what? I'm going on vacation here too, because this is actually going to be my first vacation, I believe, in 3 years, and I'm taking the kids to Disney. So going down there, me and Joel tonight are going to be at the Cleveland Cavaliers game there, or one friend's got a box, so we're heading down to Cleveland or later on this afternoon. To watch the game, and then I'm taking off to Florida. I'm going to go to Disney World for the week. So you guys are going to miss me here for next week, but we got a lot of special guests here next week.
Are you going to come back super bullish, Disney?
I don't know. I'll have to find out.
I guess so.
I'm going to go down. Yeah, I'm like Sazi. I'm getting right down there. I'm going to go on, check out Disney, see what it's all about, and come back with my view on the stock.
You're gonna come back exhausted, is what you're gonna do. But,
yeah, you're gonna need a vacation.
3-year-old and 9-month-old at Disney World doesn't sound relaxing.
Spencer, so you're gonna be running the show tomorrow?
Yeah, tomorrow will be Brent and I running the show.
Okay.
And
Luke, is Luke gonna come in?
Luke might hop in for a little bit, but that's tomorrow. And then next week without Dennis. Next week we have a special week actually. Next week, it's sort of in conjunction with, we have an event coming up in Boston, the Benzinga Women's Wealth Forum on March 21st. So next week is going to be kind of dedicated to that week, and we're going to only have women guests on the show. We have like 20 guests scheduled next week, all throughout finance, traders, people who work for brokerages, people who work for exchanges, coming on the show next week. And that'll be that. But then tomorrow, we've got Ryan Craver, who's going to preview the retail earnings for us. He's probably our favorite retail earnings guest. And Phil Davis, that's on tomorrow's show with Brent and myself. So that'll be an adventure. But if you want to catch any part of today's show or any part of our archives, you can do so on our podcast, which is on iTunes, SoundCloud, and Stitcher, or go to youtube.com/BenzingaTV to just rewatch it there. Thanks to our guest today, Tommy Lackey. Joel, you got one more thing before you want to go?
I just, this guest list for next week is unbelievable here. Lydia Ida Feakley, Kiana Danielle. We also have a hedge fund trader, Christina Key. We have money managers, Diana Joseph. One of our old favorites we haven't talked to in a while, Anne-Marie Band. Nicola Duke is going to join us from across the pond. Our oil trader, Tracy Schuchard, a very popular follow on Twitter. Kate Stalter, more in the long-term investing here. Friday's a big day. Tracy Reiniak. I know, Dennis, you've made some good calls off or good trades off her Zach's research. Also, the head of Tasty Trade, Christy Ross, is joining us on Friday. And filling in for Dennis is going to be Mr. Benzinga himself, Jason Rasnick. So he will be weighing in on the market. So, Dennis, you're going to have to get your headphones out for your iPhone and be listening to Benzinga.
I hope you're flat.
Yeah. So there we go. We got a big week next week. Good luck tomorrow, guys.
Good luck. Have a good one.